Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look in the gold market. So probably should be quiet period until the release of the gross domestic product today. Well, here is a few tricky moments exist on gold market. In general, yesterday we said that since market behaves a bit irrational around resistance and shows some inner power, some purchase powers, because it really doesn't want to react on a target that has been completed, trying to move higher. So clearly exists some bullish pressure here, not the Judmonopoly dynamic pressure, but just simple bullish pressure that supports the current price level. That's why we should be extra careful when taking any short position. Although technical signs exist, some bearish signs exist, but well, if you still would like to follow these patterns, try at least to find the point where you could place very near standing stop. Do not risk too much in the current circumstances. Here's why. So actually on the 4-hour time frame chart, that's the things that we have talked about. Recall what we said about this OP performance. Even after the engulfing pattern has been formed, we said, well, it's great, we could try to use it for taking short position. Next day, market has erased it, and now at first glance it seems that we have the final bearish performance. It's just because market has formed bearish reversal swing here, and it looks like something like head and shoulders or something that's certainly on the time frame. And approximately the same story we have on euro currency. But what I do not like here is two things. First of all, this might be, and it actually seems that it's more probable, that we have the falling wedge, which is potentially, theoretically at least, should be broken up, because this is a bullish continuation pattern. And finally, if we'll take a look on the hourly chart, yes, we have this downward action, breakout of this channel even to the downside, but overall performance, take a look at it. It's not really very fast. It's gradual, and it carries more features of the retracement. So I would suggest that taking the short position in this environment carries significant risk. That's why, if you still would like to take it, because mostly a lot of it will depend on the numbers that we will get. That's why I just do not want to deny it totally, taking the short position, because maybe you will be right. If you're taking short position, market collapsed, and then you will accuse me that Sive said that you should not take the short position. So that's why I would say just one thing. So if you would like to take the short position, try to take it as closer to some invalidation point, let's above this top, for example. Or if you will wait for this possible godless triple to sell retesting of this line, just build here a few levels and hide the stop above the 618, for example. Try to minimize your risk in the current situation. Because the thing that I also do not like is that actually gold market moves together with the interest rates. So if we'll take a look at the 10-year yield, it also is moving lower. And definitely here you could see the signs of the, well, it's also very slow. In fact, market is completing here this minor A, B, C, top, D pattern. It's almost has been completed. It's also some kind of the retracement type of action. And the same you could see on the gold. So this can't last for too long with the same action, because gold in current environment actually has to move higher because interest rates are moving lower. But that might be just on anticipation of the release of the data. So really bad numbers could trigger significant action on the gold to the upside. So risk, as you know, and we discussed this now, fundamental reports on weekly, the fundamental background is really weak in the United States. That's why the negative surprise in gross domestic product has big chance to happen. And that increases the risk of the possible action here in failure of the possible hand shoulders pattern here, or something that look like hand shoulders. That's why, as I said, if you still would like to take the short position, try to minimize your risk and maybe trying to take a position as high as possible. For instance, maybe it makes sense to wait for the catalyst people to sell. That lets you to take a bit higher level, something of that sort. That's just some warnings about the current situation before the release of the important data. So let's take a look what will happen.